Neela,
Yeah.
can you record the
Yes.
sessions? A very good morning to all the members of Bangalore Valuers Association. Today's session, we have requested our own member, Mr. Nataraj, to deliberate on such an interesting topic, financial modeling, which is very much in demand these days, considering a lot of startups require the financial modeling to proceed before with valuation is considered. Now, I request Mr. Ravindranath to formally introduce Mr. Nataraj, our today's speaker, to the audience.
Yeah, thank you, Shilpa. Good morning, everybody. It's my privilege today to introduce the speaker of the day, our own member, Nataraj Nandanjaya. He is a qualified cost accountant, qualified registered valuer, insolvency professional. He also has international certifications in valuation. He has got variety of experiences. He has executed many valuations, and also he has been a part of M&A and FEMA valuations, ESOP valuations, and he has done quite a bit IBC valuations. He is a practicing cost accountant under the name Nataraj Nandanjaya and Company, and also a partner at BBS and Associate, which has got a larger presence in southern India. And as an insolvency professional, he has handled many assignments. And before he got into practice, he had a large experience, 25 years of corporate experience, where he worked with ADP, Infosys, BPO, Amazon, Deutsche Bank, and all. And today it's our privilege to listen to him and get trained under various business models. Back to you, sir.
Thank you, Shilpa, and thank you, Ravindranath sir. As Shilpa mentioned, this is my passionate subject. I am doing a little bit of research on this. I want to do more research, but I'm not able to get time uh, because this is a very interesting topic, and um, uh, like we get to explore business and strategy when we do financial modeling appropriately. So that is the reason I'm quite interested, because I am more interested in business rather than numbers. Secondary interest is numbers. Business is important, and obviously numbers has to support. We can't just talk in the air. That is also important. Let us move on to the topic. I will.
Neela, can you stop the sharing? Yeah, while this is a CEP session, I request whoever have made the payment and are participating, please participate in the polls. All of the poll report, registration report, and attendance report will be sent to IBBA, and whoever is present in the program throughout the 2 hours, only for them will be issuing the CEP certificates. This is as per the IBBA guidelines. Yeah, Mr. Nataraj, over to you.
Yes. Okay. 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 Today's session, I will be I will not be able to kind of cover entire financial modeling because it is very vast. So I will be covering some parts which is important from business angle, because we all have experience in valuation. So I will not be covering valuation aspect because that will be repetition actually. So this is what are the expectations on the session. So I will cover basic structure of modeling and then theoretical structure, building blocks of financial modeling from strategic perspective. Like I will share one of the example of financial modeling which I actually have done. So this is because this is a confidential document. I will kind of share it in confidence when I say try to mask the details and all those things. So that is one thing which I will do. And I will not cover Excel formulas because that will be a very detailed separate session. Because that will digress us from understanding the concept. Detailed calculations, graphs and ratios, all those things I will not cover. Cash flows and valuations I will not cover. So the session focus will be best practice sharing and discussion, prime focus on concepts and less on calculations. So apart from my financial modeling experience during my last 3 years, 3 to 4 years of practice, along with valuation, I have done a few assignments on financial modeling. Other than that, this kind of interest and experience come from my corporate experience, where I have extensively managed large operations in finance and other areas also. I have been in BPO space, and I have been in heading the finance function for a medium-sized company. In large companies, I was in operations and transformations. So I strongly believe that getting a holistic experience is important for doing the financial modeling. So nowadays, what happens is few people, I will not say everybody, because they are in hurry, they do the financial modeling not accurately. So they just use some Excel, some percentages and all those things they will use, and then it will be very high level. But next year when they see, it will not be achieved. So achieving is not only because of projections, it is execution also important. But the projections has to be done appropriately, and that's important. And what are the contents I am going to cover? So what is the purpose, and what is important for scaling output, business models for startups, revenue and cost model, marketing channels, target addressing market for fintech company, return on ads spend for fintech company, customer acquisition cost example, CAC example, unit economics. There's a bit of repetition here. So expenses breakup, fixed assets, cost drivers, direct costs, drivers for direct cost, indirect cost drivers, working capital, source of funds, use case, and regression example. Regression is a very important tool. So I wish I could have had tried to do that for a longer time, but maybe some other time, if I get opportunity, I will try to share regression in detail. Today, I have kept in the end, and I want to necessarily spend at least few minutes on regression, which is very helpful to do the financial modeling. Okay. Now, what is the purpose with which we will do this session is important. Target client, mostly startups, SMEs who are scaling up. I will not be focusing on something like larger enterprises, because while the same logics apply for larger enterprises, but if you see the organizations with larger experience, larger incorporations will have their FP&A team, and they have their Oracle or SAP or various other tools, and they will be using that actually. So even people who have worked in FP&A, if they were to be asked in doing Excel, sometimes they fail. I will not say everybody. Some of them fail because they would have done in using tool, or maybe they are doing only some part. They will be doing only one part of it because there is hyper specialization in organizations. So that is one thing. Since we don't have all those softwares and tools, we will not be able to experiment that here. So we'll use simple formulas. So what are the challenges and opportunities which we see during our exercise with the clients? So co-founder is mostly non-finance person and passionate but lacks experience and clear vision. If you see, a lot of young people are coming into startup field, and they are ready to start, and they are able to get funds and various things they are doing. First couple of years, or probably 1 year or 2 years, they are very good. But after that, they find it difficult to scale, because they miss out on hiring the right people in the leadership positions, or they don't go to right people for mentorship. Now you see a lot of people are mentors, and they are also very young. I am not having any issues with youth. Youth are fine. Some young people are very much better than experienced also. It's not about the age, but how they can bring in that somebody has 10-15 years of experience. How can they bring that in 2 years, and then that is a talent actually. So there itself, you'll have to get people who are experienced in your team, and you can lead even if you are young. So if you see companies like Zepto is started by somebody who is at 18, and now he might be around 24, 25. And OA Rooms also started by somebody who was 10th pass out or 10th fail, I don't know. So that person also somewhere around 28 now. They have built and they are successful until now. Need of the hour. Why they need modeling? What they do is they either need it for pitch deck or valuation or investor purpose. So they say that, okay, you build it in a day or something. Or sometimes, most of the times, they come for valuations and they say we don't have projections. So first thing is, we should be very clear that we don't accept projections as part of valuation work, because valuation we do day in, day out. It can be done in probably 2-3 days if all information is available. But when it comes to financial modeling, it will take at least 10 to 15 days minimum. And it is very extensive exercise. Maybe even 1 lakh also is less to charge. But startups won't have much money, so we have to compromise. So that is one thing. So this is about the purpose, how we will be going through. I already started talking about what really happens uh, when company scales. We also have a classic example of Byju's, who survived 7-8 years very well, and they also acquired a lot of companies. But now they are facing a lot of problems, which, as per our information, comes from social media. The one of the thing which we can assign to us, the reason which we can assign for Byju's failure is obviously governance. Either I have not gone deep into it, but at least we don't know whether he had a better CEO or leadership or controls and all those things in place. So any larger companies, if you see, you should read a book by name Good to Great, and a book by name Built to Last. So, Good to Great is a book by what is his name? Collins. I'm not able to suddenly recall. I have read it at least two times. So it is the experiment about the real-time companies which stayed for more than 25, 30 years. I think it's more than that. And they have actually taken out examples of how, what are the various things they adopted, the best practices from these companies. Build to Last is about HP. So these two books I can recall, which is very good, and in terms of how a large enterprise is set up. So if you see, I mean, having worked with these large corporations, Amazon, Infosys, ADP, and Deutsche Bank. Amazon, I can talk for hours because the kind of leadership principles and the kind of culture they have inside, there is very little room, being such a large organization, there very little room for any compliance or governance failure. I mean, if you see that in news that there are cases booked against Amazon also, which is part and parcel of the company Reliance also had, and various others, even I think Mark Zuckerberg and various people do face that. But how they actually come back? So that kind of system is there wherein they can come back soon. Otherwise, they have made so much money that they can manage that kind of problems uh, by, uh, by overall ensuring that they come back to the compliance. So that is the main thing. And the reason I am talking about all these things is because when you are actually advising the clients on financial modeling, these are the things which, if we keep in mind, then we'll be able to allocate appropriately. Say, for example, spend on technology, marketing, and people. So I'll give one example of the, I mean, with the client whom I was dealing with. He is now 22 years. I think he started at 18. Though it's not a very big company which he has set up, but significant, like reasonably big, wherein it is making profits. And it's not a technology company. It's into retail business. So main thing is what I observed when I was talking to him and doing the modeling. He was clear about how he'll achieve sales and all those things. But when I talked about what are the kind of technologies you are going to deploy and how many people you will need for growth. So I think like third year, fourth year, he's saying he'll do some 5 crores, 10 crores, something like that. But when it comes to number of people, not even 5 crores, I think some 30 crores, 35 crores, in that range actually. So he is not thinking of supervisors. So he's only thinking of people. Okay, I will need, this is my productivity, this many people I need. But let's say you have a people of 30 people. The moment you have 30 people, you need finance team, you need HR, and you need admin and facilities, and you need an office. So these things are there which founders don't plan. Either you have to plan for finance and also HR, otherwise you outsource it. So that is also one thing you can do, but that needs to be planned. Okay, so other thing which I was talking about is they don't tend to take external professional help or spend on professional advice. Okay, so capacity and capability building is very important, because when you want to scale, you should be able to. I'll give an example. Okay, just yesterday I was reading some LinkedIn post. It's our own CA firm in Bangalore, which is a very big firm, Guru and Jana. Guru and Jana have scaled up, and they have scaled smoothly. So they have, I think, if I'm not wrong, some 300 people, and they still have the building for another 60, 70 people, it seems. and they have culture in place, structure, and everything is in place. So whatever I hear, I'm saying, so not beyond that, from the positive angle. So that is the thing which is important to bring the capability in place. Otherwise, we'll fail to expand, and then when the work comes, we'll not be able to deliver. Okay, organization structure and succession plan. It's very, very big
Mr.
topic
Nataraj, we can't hear you. Can you
actually.
repeat?
So,
Your voice was breaking.
okay, now a lot of things are talked about runway. What you need, let's say per month, 1 crore, you have 5 crores in your bank account. So that means your runway is 5 months. So you can survive for 5 months. It's very bad way of executing you're running your business. And I think I was just talking to like few people in the startup forum, and I was mentioning that you should never run the business using investor funding to be used for your R&D technology, which is for only capex. You should be able to run your business working capital. You should get it from either your revenue or from your own working capital arrangements, like your receivables and payables. I mean, your payables, liabilities, and OD you should be able to manage. So this should be the structure. Then there is no question of runway. It means runway means run away. Something like you have to just add a. So also this financial founders, probably they are adding good amount of salaries for themselves, and whatever I really don't know, because of which also they are not able to manage this financial funding and working capital cash flows properly. So those things we have to keep in mind while advising and doing the modeling actually. So basically, what are we looking at actually? So when we talk about financial modeling, we are only simply trying to arrive at these things, which is income statement and balance sheet, cash flow statement, ratios, cap table, and investment needed. These are the things which we are trying to achieve. Okay, now when we are mainly trying to understand, build financial modeling, we need to understand the business models. So these are only few because this doesn't cover the traditional business models which we have. These are something coming up now due to all these new businesses coming up, like FinTech or HR tech or the various other businesses which we are seeing actually. Maybe even the delivery, supply chain and delivery, e-commerce and all these businesses. So these are the business models of freemium, pay-per-use, uh, and then SaaS-based model. SaaS is software as a solution, which we see is like the company like Zoho, which has made big, though being, I mean, one of the Indian businesses which has made it big, which is a good thing for us. Subscription model is for your Netflix, Amazon, and all those things. OTT business, transactional, marketplace, and ads. So these are few business models. This is, as I said, is only few. So we should be able to, when we are building our revenue stream, we should understand these models. Only then we'll be able to build the models appropriately. Now, let us look at top-down and bottom-up approach for a revenue and cost. So obviously, when we are building the model, we are right from top, we want to understand the potential of the market, and then we want to look at what is the target market, and then we will bring in the operational metrics, cost metrics, and investment need. Okay, so that is how we want to do it, because here I mean, there's some example is there with respect to car rental business, because I've just picked up this from online for our reference only. Okay. Okay. So various marketing channels. So this is also very important, because if we want to project our revenue using return on ad spend, ROAS is a very important way of forecasting your revenue. You can use other methods, traditional methods, and various other methods. Case to case basis, we can change. But in this presentation, I'm focusing on ROAS. Mainly can be used for the modern businesses, and then also for service industry. So these are the various marketing channels we have. Digital marketing channels, offline marketing channels, hybrid marketing channels, emerging marketing channels. Selecting and optimizing the channels is important. Now in digital marketing, we have search engine optimization, pay-per-click, social media marketing, content marketing, email marketing, affiliate marketing, influencer marketing. So you all might be already aware of these terminologies. So this is very much required when we are talking about digital marketing channels. So search engine optimization is nothing but how you are able to see your company's results on top when you are using Google. It will come on top. So there will be, I think, there will be others also who will be using SEO. So either you can come on top, or top 3 or top 4. So all those uh, keyword search and all those things, if you ensure you are, so there is a technique of SEO. I am not very familiar with the details. So the people who are technical guys who are good at it will be able to execute you set up your website accordingly, so that the search engine optimization will make sure that you are coming on top actually. So, and this pay-per-click also, sometimes when you actually go into any website, you are able to see some ads, and you might tend to click. So you'll have, when somebody clicks, you'll have to pay to the advertiser. So that means you are getting the visibility. So this guy Jatin Shah will come now sometimes when you are on YouTube. He's a very young guy. He is doing Power BI workshop. Learning Power BI on my own. So I've not attended that, and I don't tend to attend also, because some things you have to learn on your own. Actually, you have to use it. So he usually does a lot of advertising on YouTube actually. So offline marketing channels, we know this is the regular thing. Hybrid, so chatbots and messaging apps and voice search, smart speakers, virtual and augmented reality.
Mr. Nataraj, considering the time constraint, can you also, because financial modeling is more into how we are using this in our model.
Yes,
so
yes,
you...
we will come to that, Shilpa. I am conscious of that.
Yes. Okay.
Yeah. So selecting optimizing channels is also very important, because you have to ensure that these based on your business, you are going to do the audience analysis, goal alignment, budget allocation, test and optimization, and integrated marketing. So these are some terminologies which we have. Probably you can just spend a minute to understand. So this might be something, most of it by now we are good, because many times other speakers have spoken about it. And maybe if we were in 1.5 year, 2 years back, we don't understand few of this. But now we are good enough to understand these things. Okay. Yeah. Just to respond to Shilpa, that most of my presentation, at least next 15, 20 minutes, 25 minutes will go on presentation only. I'll not be going into Excel. But there are some examples now, because now we have TAM for FinTech company. So the focus is more on the, as I mentioned in the beginning, is understanding the concepts, and then application also we will be covering, but not very much in detail, because building Excel model, financial modeling is a very extensive exercise. Probably that will be a kind of working session we want to have. So we will move on to this. So how do we actually build a target addressable market? I have just taken example of a fintech company. How do you build a target addressable market? Define the fintech product or service. Identify the target market segment. For example, segments for mobile banking might include individual customers, millennials, Gen Z, unbanked populations, small and medium-sized enterprises, and large enterprises. So these things you should be clear on what is the market you are trying to address. So determine the market size of each segment. Okay. So individual customers, a small and medium enterprise, large enterprise. So you will have to do the market research. Somewhat like you have to look at population data, use census data or demographic reports to find the number of individuals in the target age group and geographic location. And penetration rates, estimate the percentage of target population likely to use your service based on market research surveys or adoption rates of similar services. SMEs business data, so you can obtain the data for SMEs from business data. And basically you have your MCA or industry reports and all those things, economic surveys. Adoption rates, estimate the percentage of SMEs that might adopt your fintech solution. Probably in these cases, you see quite a few times there are surveys coming out, Google Forms filled and all those things. So those kind of things can be used. Large enterprises, find the number of large enterprises through business directories and industry reports, similar to adoption rate, similar to SMEs. Estimate the likelihood of large enterprises adopting your solution. So how do you do the TAM computation? Average revenue per user. Estimate how much revenue an average user or business in each segment will generate. Market penetration, estimate the maximum potential penetration rate. Example, what percentage of total market can you realistically capture? So revenue potential is nothing but market size into adoption rate into ARPU, average revenue per user. So combine the revenue potential estimates from all segments to arrive at the total addressable market. So basically TAM is equal to segment size into adoption rate into ARPU. So there is an example here. So if we are talking about individual consumers, SMEs and large enterprises, taking example of let's say in individual consumers, we have 100 million adults and adoption rate is 30% and average revenue per user is 50 per year. So revenue potential is 100 into 30 into 30% into 50. So that will be 1.5 billion. Similarly, SMEs also same calculations you do. Large enterprises also you do the same calculation. So here again, total TAM will be based on your adoption rate. Adoption rate is your penetration. So how much you can penetrate. So that is the market share which you are able to acquire. So that is the target market share, target addressable market. Whether when you will acquire. So let us say you have this 2.507 target addressable market. So are you going to acquire in 1 or 2 years? So that is a plan you want to have for 5 years, 10 years. The strategy that is how you want to build that. So your revenue projections will accordingly come from here. So return on ad spends. Return on ad spend is see, now we are coming to this place where you want to project your revenue. So when you want to project your revenue, traditionally, how it was done again based on the leadership, the entrepreneurs. You have the TAM and then you have adoption rate. So accordingly, you can say, okay, I want to reach $2.5 billion as you have seen in the previous slide in next 5 years. You would probably say, okay, 20% this first year, second year, 30%, something like that. You spread it actually. So that is one way, or there can be other scientific methods, no doubt. But one of the way in which you can do the your revenue forecast is using return on ad spends. So in case you are spending 1 rupee, for every 1 rupee you are spending, how much of revenue you are able to generate. So that is something you are able to do it. Like here we are giving an example of every dollar spent, $5 revenue is generated. If your ROAS is 5. Okay, so sales computation using ROS. So this is one example. Last quarter advertisement spend 50,000. Last quarter revenue is 200,000. So that means historical ROS is 4. Based on trend analysis and expected improvements, you are saying 4.5 because you want to have some kind of organic growth also. So expected revenue is 4.5 times because right now it is 4, but you want to say there will be a growth every year. So that also you have to factor in so that you want to say 4.5 or you can have a growth as well. That is also you can do. So this is how you are saying the total forecasted revenue is $500,000. Using you are using other non-advertising sources also. Next, we will come to customer acquisition cost example. So these are the various customer acquisition cost which is incurred. Example, I will be in my used case also, I will be showing you how I have computed TAM and the CAC. Not CAC as such, because I'll be going through ROAS and TAM also. So this is an example from which I wanted to share first. Because digital ads, so all these the expenses are there. Estimated cost, total customer acquisition cost is 42,500. And then if the company acquired 500 new customers, that means for each customer, you are spending $85. So unit economics is also very important thing. So computation of unit economics for the entire financial model is one of the thing I would say is little difficult because if you in the case at least I have handled, if you have various revenue streams and you have time constraint, unit economics, bringing up to unit economics is little difficult. So it is bit of an extensive exercise because you have to use somewhat your I mean, all of us have gone through our cost and management accounting. Myself being CMA, I'm into practice of cost and management accounting. So I will show you cost sheets also. Those principles have to be used to arrive at unit economics actually. Now, this is high level unit economics. You can see average average selling price. We are aware. Gross profit. We are aware. It's not a big thing. Customer lifetime value. How do you measure? Is important. So what is your attrition rate? What is your attrition rate? One divided by your attrition rate will be your customer lifetime value. And customer lifetime useful life and customer lifetime value is nothing but the number of customer lifetime useful life into gross profit. And customer acquisition cost, you know how to find out. So CLV divided by CAC will be what is whether you are able to scale appropriately or not. Okay, so that is something you are able to find out. Is there some things on chat? Okay, I didn't go through this. Let me just. Okay, someone is asking. Okay, Shilpa is asking. Yeah, so I want to address these questions now, and then we can go to poll, and then we'll move on to next section. And anybody has any questions also, we can, whatever we have covered till now, we can go through. Shilpa's question is whether any registered valuer can take up assignment of financial along with valuation. Is it conflict of interest? Actually, I don't know if it is conflict of interest because uh, you are getting all the information from the client and you are taking the management representation and you are building the only thing is it is a separate assignment. You have to charge separate. I personally don't think it is conflict of interest because it is an assignment you are taking. You are not doing any statutory work for them. You are doing the projections and then you are doing valuation. And again, while doing projection, you are even when you are, let's say you are doing only financial modeling, even then you are advising them, but finally the decision is made by them on how they will, how much potential, how they will acquire market, how many people they need, all those things they will only decide. Okay, please name the books. Good to great, make the leap. They built, this is Jim Collins, Built to Last. Somebody has put that is correct. Yeah, Shilpa has mentioned this. How do you demarket, collect data specifically of revenue from ads from total sales?
For this question, I also had a point. So
Sabu's question, Shilpa.
Yeah, if the same customer is repeating and if our software can track, then it is an organic growth.
Yes, that is true. So yeah, it is. You cannot assign that for ad this thing. If it is same customer is already you acquired, so you don't have to acquire that person.
Other than that, all other sales will be new sales will be from the ads.
New sales only is from ads. If you see the formula also, new sales is from ads, and even in new sales. If there is some other way you are acquiring, then you can exclude it. If you are clear that this is not through ad, let's say some reference through you got something. So then you don't have to say it is from ads. So it is little difficult. It's a fine line. We have to make a decision there. That needs to be that formula you have to, while projecting also, actually that's what, as I said, while projecting, we don't have to go with ROAS only for 100%. We go 30% ROAS, 30% organic, 30% some other way, different ways we can go through. And actually speaking, people used to project without having anything. Now, if you have ROAS, something is there actually. So that is a good thing. Now we want to filter more and more, much more better actually. Okay, Shilpa, should we go for one or two? I think first two questions.
Yeah, first two questions, I can launch the poll.
Yeah.
Since this is a CEP session, the poll report will be sent to IBBI. So I request all the participants, even though you have paid, not paid, to please participate in the poll. I think the viewers can now see the question number 1, right?
Yes.
Yeah,
Okay.
A, B, C, D, meaning first one, second one, third. So A and B will be 1 and 2.
We cannot see the question.
So actually, I'm getting the votes. So I request you to maybe recheck.
I'm seeing the presentation, but not the poll. Okay.
I have a question for Mr. Natraj. Can I ask?
Yeah.
Yeah. So Natraj, I just wanted to know, like, for a very new company, there may not be any historical data on ROAS, right? So is there any industry data, like if you spend this much, this is the ROAS for industry types, specific industry types?
I don't know any industry site, but should not be a difficult thing, because we'll have to probably take help of any of the industry colleagues, or even ChatGPT gives.
Oh, is it? Okay, we'll try that.
ChatGPT will give the details actually. Yeah, the answer is A and B. Third one is not, as I said, using runway is not a good thing as a strategy. So, lack of lack of investment. People have said only 4%. That is right only. So A and B's people are supposed to answer. That is correct then. Yeah.
But at the time of scaling, they will not get funds. That is also one reason why they fail, right?
No. I'm talking about scaling. Large scaling, that's what I'm saying. If you are using funds for working capital purpose, using runway is not a good thing. That is why, and also I am saying the best two answers. I don't know what is the question I mentioned.
What goes wrong mostly with the startups when scaling?
Yeah, mostly is because they don't invest in governance and smart leaders.
We are talking about scaling.
Yeah, not okay. Yeah, scaling, not bringing enough funds needed for runway is not. Might the startups might use that as a correct answer, but that is not the right thing actually. If they do that, then they are sustaining their business through funding only. This is one thing which my personal advice is, that they should move away from that, and then start generating money. So, okay, coming to the point, simple thing is, most of the startups, in my view, fail because of importance on governance and investment in smart leaders. There is again, I can't recall suddenly, there is a survey also, reports which I do get every now and then, that also talks about controls and governance and all those things. That is you might have seen many surveys, which is actually post we see is from them only. We'll go for one more poll question.
Yes.
Anyone has any question also, we can take up.
Subscription model best fits to this service provider. After seeing your poll questions, I have started to feel that, entrepreneurship is not always about a product or a service. It's not about the technology which goes into it or everything about the product. It's much beyond marketing, compliance, governance, funding.
Yes, yes, yes.
How
Actually, that's where now everybody have become very much I mean, they have started becoming careful. And if you see all these numbers, what we there are so much of numbers, so much jargons. They also use, and in fact, my client whom I was advising on financial modeling, I am using all old terminologies because we know average revenue or something like that. But that guy is talking about some new terminologies. But we know that this is an average or this is some multiple or something, productivity or something, which is from our learning. But that terminologies, there is a new jargons and people are using it. It's nothing new. It's only new terminology, but all those things what we have learned in costing and in our accounting and all those things, it is same thing. But new terminologies. Okay. Let's move forward.
you can, as all of the participants see, watching of web series and movies is correct, no, Mr.
I didn't take up that. It's a quite obvious one. How much was the percentage, Shilpa?
87% voted
Oh,
on
yeah, yeah. It's a
of
simple
web
question.
series and movies.
Yeah, yeah, okay. Okay, so again, simple slide, expenses breakup. What we have is direct cost, COGS, distribution cost, employee cost, and indirect cost, we have employee cost. That's right, okay. Employee cost, technology cost, marketing cost, administrative cost, legal and depreciation. And
Just 1 minute on the earlier slide. This normally, how much time do you take in your entire valuation assignment? Because this can go too
financial modeling
technical.
assignment.
In the financial model, how much time will you take for this? See, while revenue breakup is important, most of us will spend on that. But how much on this? Because monthly it can be an average, annual. How much in
Right.
depth?
How much time? I'll just address. I'll next two slides. Let us discuss how much time it will take. After this, we'll discuss actually. So while we discuss that formulas, I think we can just think about. Even I am not able to exact a number. I am not able to allocate, but let us think about it. Fixed assets. So how do we project is something which I am taking up next. Drivers. So fixed assets, we have computers, laptop based on number of employees. So usually computer laptops is a straightforward thing. You project employees first so that you can project computers and laptops. And how many people you want to give laptops and computers accordingly. Printers, again, you have to see how much you want. Furniture and fixture based on the size of the office. All those things you have to see. Plant and machinery based on the kind of operations and business. So here, when we talk about plant and machinery, this is where our capacity, the product and all those things comes into picture. So that is something a very detailed exercise. Okay, now Shilpa's question also we can address here when we are talking about cost drivers. Cost drivers, when we are talking, we'll go one by one. We'll understand the concepts and we will be going through use case where you will be implementing this concepts. Cost of goods sold is how do we arrive at cost of goods sold? Okay, so that is one thing. Cost of goods sold is basically your direct. Do we have in this slide or next slide? Here we'll go through this and go back to the previous slide. So your direct raw materials and direct labor, okay, is the cost of goods sold. So whatever is directly attributable to your product will be your COGS. So in the example, I will tell you, I was actually doing the financial modeling for one of the bamboo based manufacturer. Okay, so it is straight away, it's a raw material. It's not a technology company. So here, cost of goods sold, you can easily find out with what raw materials you use, and whoever is doing that work will be direct labor. So it's quite easy, and distribution cost also per piece you can find out. So here you can find out. But when it comes to technology, then it becomes little complicated. We have to use the respective technologies. What is the cost of directly, where mostly it will be, maybe the employees also will be direct cost, because they are the people who are actually working on it, and the support staff will be indirect labor, indirect cost. So that is how you come up with cost of goods sold. It's important to come up with the direct cost, because then you can find out your contribution margin and gross profit. So that is important. Coming back to the previous, so employee cost. So here employee cost only, main thing, employee, I think, let us direct cost based on bill of material. Okay. The other thing is direct cost is little bit jumbled up, because I have put drivers in the next slide, and we have to go back again. Based on bill of materials is you can have it for, if you in a costing cost sheet, when you prepare, you will have bill of materials. I'll just show you that also. I'll show you the cost sheet actually. Based on productivity is direct labor. Direct labor is something productivity. Based on productivity, how much they can manufacture. One person can contribute how much productivity. Okay. Distribution cost, we know, supply chain management. Okay. Now, indirect employee cost is something based on span of control and productivity. So productivity also is important, but span of control is very important when you want to do employee cost, because how many leaders you want supervisors, and then you want leaders, and all those things you have to project. So accordingly, how much technology team you want, marketing team, operations. So again, this, if you have to go case to case basis, and you have to analyze. So like I mean, what I have done in my this exercise is that for this many people we will need, okay, for 20 people we'll need one finance person, and then for 20 people we need one HR person, something like that. With my experience, I have used it in my use case actually. Similarly, if there is 50-60 people, you need one leader, one senior manager is required, something like that. So that is usually the founders disagree, that we don't want to pay 1 lakh, 2 lakh for a senior manager. Why do we need that much money? I am not taking that much salary is the answer I had got actually. But then without people, you can't manage the show. That is important. Now, coming to the question of how much time it will take, maximum time goes in sales only, no doubt. When you project sales, your work is like 30%, 40% done, because you have your top line. So once your top line is ready, lot of things are connected to top line. How much revenue you want to achieve. Based on that, you need to understand how many people you need, how much productivity, what capacity, all these things will come from your top line. So top line is done, 30-40% of time is done. And all these things will take maybe 70% of the time. Now, what is the total time? For this company, actually, I kind of quoted something and I underquoted. And I took long time. Later, again, couple of assignments I did where I managed to quote little bit high. Still, the time spent was more, because I took at least 3 to 4 months to do the financial modeling. Not continuous, because whenever I was free, whenever that person was, many hours of time spent on each and everything. We used to open Excel sheet and keep thinking how much to do with this, what to do with this, that you just get into the shoes of that person, the founder, and then discuss. So that is when you each and every number will come. So I would say if they can afford minimum 2 lakhs, you have to charge for financial modeling. Minimum, I'm saying, but If we can keep our templates and everything ready, we can do it for less also. But proper financial modeling will take time. But if you want to do in one day also, you can do, because it's just that you put percentage and pull the row, it will come. Whatever you want, you will get it actually. In fact, that person had used that only. In Excel only, there is a function called forecast. It will forecast. How it is forecasted, we don't know. We have to find out that. Okay, so technology roadmap. So main thing which we see is that in one of the tech company also, when I did the modeling, that technology, they invest in the beginning. After that, they are seeing very less cost there actually. And also marketing cost very less, because they want to have good profitability to build good valuation. But then without investing on technology and without investing on marketing, how they can sustain in the market? Because there is the technology product. This is one of the health tech product where I did modeling and valuation. They are in health tech, and they are competing with various others, Farmeasy and other people, and how they can sustain. So I had to mention that you put a lot of money in technology. If you want, you increase your sales, then your revenue will be there, and those things we'll have to look at it. We have to understand exact technology, what they are using, all those cloud, how much they are investing in cloud space, APIs, what does the cost, all those things we have to understand. Okay, working capital also we might have done before. It's inventory holding number of months into sales volumes. Inventory, what we are holding, bills receivable number of months into sales, and bills payable number of months into purchases, rent and other deposits, advance received from customers. I'll quickly finish this and we'll move to example. I know we are waiting for that. Bank overdraft, other expenses payable, duties and taxes payable. Source of funds is again, it will come in the end, because you know how much money is required after doing all these calculations. Then you want to go for equity, CCPS, safe note, CCD, long-term debt, all these things we can calculate. Okay. Stop sharing and go to Excel. So you are able to see the cost sheet. I said I'm going to show you the cost sheet. Okay, this is the typical cost sheet. We actually use this in our firm now. It is properly made with 10 years of experience of our partners. I am only 3 years into this, but our partners are 11 years of experience. They are number one in Kerala. And Karnataka, I am growing this business. All public sector, private sectors, they do the costing, cost audits. So this is a typical cost sheet where you have all these things. I'm not going to read, you can just see. So better to keep this in front of us when we are doing the financial modeling. It's very simple way of doing, but all these things, headers may not apply for us, because like something like quality control. See, even if it doesn't apply, we can say, do you have quality control? We can ask this. Quality control is required in any business, even service industry, it is required. So in our, like when I used to manage operations, we had the QC team separate. We used to do the checking, accounting process and payroll process. So technical know-how fee, royalty, all these will help you to ask these questions actually. Okay. Cost of production, total cost of production, and okay, so materials, quantity info. So this we have, see here, capacity is there, installed capacity, capacity enhanced, actual production, profitability reconciliation. So this is one thing. Unless you have any question, I'll exit from this, or you can ask question later also. And I'll open again. Now I'll go to my use case. Okay, now whatever use case I am showing here is I have actually rebuilt this. The sheets which you see, the balance sheet, income statement, purchase drivers.
Actually, we are not seeing any screen. Are you trying to share?
No, I think I shared and again remove. Okay. You saw the cost sheet?
Yes, yes.
Cost sheet, okay. That we have finished. Okay. Okay. So this business, I'll talk about a little bit about this business. This business is from, I don't want to name the company name. Even if it appears, I probably when I am showing this is not an actual sheet. This is again built up for this presentation. When I am showing the actual sheet, I would probably stop recording.
Yeah. Please let me know. I'll stop the recording.
I will tell you. Now we will go through this, and after that, so this is a bamboo products manufacturing, bamboo products making. Artisans make this, and very good potential. They are also, this company is also selected in Bharat Pichatan. When he came to me, already they were doing some decent, some 15-20 lakhs they were doing. For a startup, 15-20 lakhs revenue with profit is a very good thing. We should not undermine. And the projections we have done is very good. So now sales drivers. So these are the different drivers we have. Channel partner distributor, through every channel partner distributor, this much sales they are able to achieve. To one partner, I think they spend 1 lakh or 1,50,000, and they get 2.5 lakhs this thing. Revenue. I don't know the exact number of amount of spent, so we'll keep the numbers aside, but this 2.5 lakh revenue they will get. Market, B2B marketplace, ROAS. This is ROAS, return on ad spend is 21.3. This is based on historic performance. As Jivika asked a very good question, yes, initially you will not get historic performance. So you have to, like, if you are coming up with a new bamboo business, then you have to go to this person and say, boss, you give me the historic performance. Something like that. Or we can download reports from MCA and try to do it. So that is one thing we can do. So that's why initial build will be a difficult thing only. So e-commerce marketplace is again one more thing. E-commerce marketplace is your have I put sales through Amazon. Amazon also you can see his products. It's very good products actually. And B2B marketplace, India Mart and exports India subscription. National trade show also they go, like I also had been to Sandur Karakushala Kendra, so for a casting assignment. They also are very good, but they do all the things, everything, cloths and like handlooms and various things. And that is from Lambani artisans. So probably they can use this model. I can suggest actually. But it's a matured business. They are doing in their own traditional way. Their government of Karnataka supports them actually. So COGS drivers. his channel. I mean, when I am talking, I hope you are reading and you can ask questions. I'm not going into each number. I will show you how it was arrived also, but it's all messy sheets. Trust me, that final sheet, what is presented to investor also, I will show, which is all good, but the workings are very much messy. We could not get time to make it very better actually, but the calculations are correct. This is 55%, 45% of sales and average cost per unit for market. This is all arrived from, see, some of them from historic estimates and average product price. This is product list prices that is there. So Shilpa, you can stop recording. I will be going to other sheets now.
Neela, can you pause the recording? Are you there, Neela?
Yes, ma'am.
Pause the recording, not stop, pause. Has any questions, they can, while the poll is getting launched, questions can be taken. 1 minute, I'm trying to launch the poll. Yeah, it's launched, no? Question 3.
Yes.
Which marketing channel is best suitable for a SaaS-based product? Actually, while the poll question is on, I was thinking if the participants, most of them who are active or continuously participating are here in the session, I assume. So if BVA proceeds to have one separate session on financial modeling, targeting say 15 hours or 20 hours, okay, would you be interested to actually enroll yourself and attend the session? Can I get S in the chat for this? Because if I get more S, we can plan. Or else initially when I took up this topic, I could not get more interest. So I didn't actually pursue this topic. So any workshop on more or less what Mr. Nataraj has said, but much in depth, because all of this is a new terminology. Maybe 2-3 years back, these terminologies were not that prevalent or at least the client was not using that terminology. Now he is using more terminology when compared to us. So while we are still trying to grab up the exact way of calculating it, we may have to explain it, we may have to use it. So yeah, but still 5 is not a good number. I got 5S out of all 34 participants.
One suggestion.
Yeah, please.
I was looking at some, do consulting for some risk management for banks. So what they do is the daily transactions goes in 300, 400 numbers. And then they pull those things using a macro and then recreate and get a full report from there. They evaluate. So for situation into financial modeling, that is the first question. Second thing is, if we know the assumptions and then create a script in Python or some other thing, coding language would be easier. I have a standard script coming up. I just use that script and tweak that. I put the assumptions in a base using calculations and it will automatically populate and throw it because Python is compatible with Excel. I can go for a data structure, or they call it in that. And from there, I reverse and convert back into Excel. So that will be faster because the way the technology, especially AI, is taking over, I feel that that is going to be more useful as compared to, Excel. And over a period of time, that might shift also. Just only to share, I think that might be because I've seen banks have been putting it, but the main problem is in the robot advisory situation. If you fail to name the Excel file correctly, the robo or the program will not pick it up. And that creates a failure. So what you do is upload all the transactions tonight and you put the robot to activate about 12:30 or so in the morning. So it will finish everything and put it in a folder. Next day morning, you can do it. And that might be a good sort of a value addition we can provide to the clients. We set up a program and suited to the clients again, what are the requirements. Next day, the client himself can get through and get the reports out.
Mr. Nataraj, if I have your permission, can we take this question in the end? Because you have some
It's a
regression
very
analysis
detailed one,
and we have,
actually.
it's a very
Yeah.
detailed thing.
Yeah,
Mr. Ravichandran, we can
I had a
definitely,
few responses, but yeah, I think
yeah, because it's a very lengthy question, we can take it up in the end because poll is also, can you answer the poll question, please?
Yeah, it is hybrid because it's a SaaS based. So any now it is like every business we can go digital marketing and SEO is done. But if you see, for example, will you ever wherever anywhere you see Zoho books on this thing, not much on digital marketing. It's through word of mouth only. SaaS based product users. It's a B2B market. So it is hybrid partnership and alliances and referral program, according to me, is best suited. But other things also, second one can be digital marketing can also be used.
Can I launch all the other questions, please?
While you are launching, I will answer Mr. Ravichandran's question, and I am showing the regression also. We'll go through that later. So within less than a minute, I would like to give my view. I'm not answering, I'm giving my view. So when we want to use any large models, especially Python and software and other things, the correct answer is segment size, because you are trying to do target addressable market, not the market potential as a whole. So whichever segment you are looking at, then that only you have to look for target addressable market. 25% people have answered correctly. So Mr. Ravichandran's question answering, the main thing is if we have so much output, so much of work, then we can employ Python and other things. Otherwise, it depends on person to person. In fact, that is what I am trying to research. That first thing is we can use Power BI and Tableau. Next to me, we can move to Python. Python also is a good idea. So I think in summary, that is what I feel, that we need to even I have implemented robotic process automation using Blue Prism and UiPath in my earlier experience. So that is for very large processes. So robotic, it's very expensive to, by the way, so let me tell you, one robo is very expensive. One robo can do 7 to 8 people's job, and it's very expensive. And implementation is huge expense. So robo deployment for our processes is no way. It's very expensive. You can use Python. Python can be used, Tableau and Power BI can be used, and macro can be used. Macro, probably next session, if there is a chance, I will show how to use macro. That's not a
Yes,
use.
sir, that will be required because I've seen many are using the macro.
Macro I can show, and I can Power BI. I am only like 30% through, and another 30% I'll not be 100%. Another 30% I will learn. And one more question of Shilpa's I want to answer. That Power BI, if you have, you don't have to share presentations. You can just give the link of Power BI. They can see the thing, and it is real time updated.
Nataraj, this macros will be very interesting.
So here, I am saying, see this again, this is my personal opinion for this answer. Sales generation for SaaS business, I am saying it is 50-50. through ROS and organic, because like most of the thing is organic only for SaaS. ROS, it's from not much from ads. So that's what according to me. It's not a big deal. We don't have to debate on that. So that's my choice actually. Okay, now we'll come back to regression model.
Sorry, we'll take this last poll question.
Yeah, we'll just take this actually. Okay, so I'll keep talking about regression. So there is two regression models. One is normal regression and then multiple variable regression. I have computed both here. How to compute also I will show. The C is the correct answer here. Customer lifetime value, customer lifetime useful life into gross profit for customer lifetime value. So first one I have taken the marketing cost versus sales. Okay, marketing, any change in marketing cost. See, this is X variable and this is Y variable. Okay, so in regression, that is the main thing. You have to decide whatever is the resultant which you are expecting, that will be your Y variable. And whatever is the dependency factor which is driving that final result will be X variable. So X variable can vary, like you can have 2 variables, 3 variables, 4 variables. Results will be, so like if you want marketing cost, how much it will be based on sales, then you should say, you should give instruction to regression model that marketing cost is what I want to arrive, which is Y variable. Sales is my X variable. Based on sales, how much will be marketing cost for the next year. Now, April only we are looking at. Based on October to March results, April, how much will be my sales is what you are looking at. Now, I will show you how to arrive at this model. And some of them may know this also, but whoever don't know can understand. Now, what is the formula? Y is equal to constant intercept plus B into X, which is, this is the B. And then B into X, you will get this one actually. Okay, so you have to take this formula. This is the constant. You will get constant through this regression model, and then this B into S. This is B. This is okay. This is constant. This is B. Okay, now what is this? So you can see this into 6 lakhs. You will get answer which is 2,66,000. This is 2,26,63,191. So which sounds reasonable, right? The way it is going here sounds reasonable. So that is more important, because if it is not sounding reasonable, then your model is wrong. So how to find out before even computing whether you want this model is correct or not? Your p-value should be less than 0.05. Okay, p-value is less than 0.05. Okay, significance level, okay, commonly used as 0.05, 0.01 or 0.1. Decision rule. Okay, 0.0, if it is in this range, 0.05, 0.01 or 0.1, then you can accept the null hypothesis. Otherwise, you have to reject. Reject the null hypothesis and predictor is significant. Okay, whatever that language, I have learned this many times, I get confused. Main thing is if it is in this range, then you you go ahead with that hypothesis and then you actually compute the results. Otherwise, what you have to do is you have to say that, okay, this is not a variable. This marketing cost is not influencing sales. If it is, let us say in this case, I will show you. In this case, p-value is 0.73. Channel partner cost is 0.73. That means this is not influencing. Even employee cost is very much nearby. Okay, 0.75 is in some cases up to 0.1 is also allowed. So probably you can, I think some of the things when I was doing some iterations, it was showing 0.1 point and all those things. No, it's 0.1 is allowed. So it's 0.75. It's, these two, employee cost and channel partner cost, both are disallowed here. So this influence, this is not having influence. But still, for the example purpose, I have computed. Actually, from this example, only marketing cost actually is influencer. Employee cost and channel partner is computed later. So probably it is also showing in the result that these two are not influencing. Your results may not fetch. I'll show you how to compute. Now I will show you the multiple variable regression. When you do, you have to take the same formula. Let me just show you the formula. Only thing is you have to add each and every intercept plus B1 into X1, B2 into X2, B3 into X3. Okay, let me put that. This is constant B1, B2, B3. Okay, X1, X2, X3 is this. Marketing cost, employee cost, and channel partner cost. So based on that, you will get that number. You are getting 19,74,381. See, it is actually not correct because it's not increasing. Okay, so that is what it shows. See, prediction is not accurate because p-value is more than 0.05. So that is how you can look at it. So I think I have done some more here. Okay, this is one example. COGS, distribution cost, employee cost. 4 variables I have taken. This prediction looks better. Okay, 2090. I'm going a bit fast, but I'll come back again. Okay, this prediction looks better. See, p-value is somewhat okay. No? 0.12, 0.11, 0.08, 0.03. So this somewhat okay. These two are still not in the range, but somewhat okay. Because of that only, you are getting proper results. By look only, you can find out whether, see, all these things are increasing. You should get a sales also increasing. Okay. So that way you can use regression model for predicting. Now, how to compute this? I will do one thing. I will compute this. First, for this, your analysis tool tab should be active actually. Now, first let me compute. After that, I will show you how to activate that. So this is okay. Let me just go to data. Okay. And then data analysis.
I hope the participants are fine. The session is going to get extended for, I think, 10-15 minutes more, no, Mr. Natraj?
Yeah, 10 minutes it will extend.
Yeah, because it's a new topic.
Questions also will be there. Probably I should have started a little bit before this one. Actually. Anyways, that's fine.
That is okay. So I request the participants to bear with us.
Sorry, I'll go from beginning. I'll go to data analysis. I'll go to regression, and then I'll click OK. Okay, once I click OK, then input range you have to select. Okay, this is selecting this input range. Okay, let me select from the beginning for you. This one. This is Y input range I am selecting. Okay. Then enter. So this you can see input Y it is showing. Then X input range I have to select. I am going here and selecting the input range. And then OK. And then you, because you have selected along with labels, you say L labels, tick on the label, sorry. And then where you want this output. Okay. That we have to select. let me put that output here because sheet is rushed. You can take it to new sheet also because I want to show it everything. I'm putting it here. So I will just click OK. Okay, maybe it is enough space is not there. I will just go to new worksheet. Okay, new worksheet. I will just say, okay. It is come in a new sheet. So you can see that whatever is there here, p-value 0.06. Where is that? Sheet 3. Same thing you can see because I've already computed. Same thing you can see. You know how to compute. I'll come back to my sheet. This is what is there in this place. So on how I arrived at the y value also I have shown. Before I go to multivariate, any doubt you have here? When I do multivariate, you will be able to see again. Otherwise, also I can do this itself again. Does it make sense? It's very, very simple. That already there in the tab. Regression, you just have to use this, that's all. And then you need to understand this p-value better. Actually, there is a little bit more we have to understand how much until how we can give. Okay, so point between anything less than 0.1 is good enough. And see, all these other things also, if you want, you can understand. Usually, R is your correlation coefficient. Regression is R square. So these are within 1. It should be less than 1. 0 to 1, it will be -1 to 1. So if it is 0 to 1 positively correlated, below 1, it is below 0 is negatively correlated. So those things are not important now because that is a little bit advanced. If we already don't know, if you know, it is fine. So there are some more things adjusted, standard error and all those things that we'll ignore. We will just take like instructions we will follow and we can do this way. Shall I move to multiple variate?
Yeah.
I will do multiple variate now. Now I am going to again data analysis tab. Okay, I am clicking on regression. I will select the multiple variate now. Okay, multiple variate. This one I will select. I will select sales, which is the Y value. And then I will go to input X range, this value. All the 4 multiple variables. See, I am not selecting the 117 line, 27, 20, 28, because that is what I want to compute. That I have kept it like that only. So I will select that. And then this is showing label ticked. New sheet we will go because there is no space here. So this is what we have got. So if you see, what is it? P-value, whatever I have already computed, if it is showing that, we can go there only and see. See, that is what is there here, P-value. And then I will explain this also. Y is equal to, this is, okay, this is, sorry, let me put this, constant B1, B2, B3, B4. This, if you go to YouTube and see, or somewhere you see, each one might use different things. Like for constant, they might use some other thing, and B1, B2, they might use some A or something. So it doesn't matter because the formula is correct. That is important. See how it is calculated. You have to use this coefficient column only. Okay, this is the coefficient. This is the constant plus this coefficient into multiply, COGS, like this. Then you will get this number, 2090. So which is the prediction which seems good. Some more predictions which I had done here is not so good. So we didn't accept that. So that's what it is. Grey software. Okay. Okay, good information. Let me keep it somewhere. This thing. I'm just saving this chat of Ravichandran sir because it might be useful.
Actually, I used it, sir. Gretel software is available. It's a free of cost one. It's free.
Great, yeah. It is Great.
GRETL.
Okay. Okay.
You can just
statistical
Excel
model, yeah?
Yeah.
Okay, okay. Yeah, let me try. Okay. Now regression model I'm done actually. So we can just simply use this day in, day out for you. Maybe you can do proper Excel linkings so that you can, and I have used Minitab in my experience. Minitab also is very easy. It's a tool. You can just go there and you can use R. R I have not learned. R if you use, you can do all these statistical models. And Python also you can use, and Great Tree, what Ravichandran sir has suggested, that also we can try. I don't know if Power BI has that functionality, we can try. Because what happens is now every time, one more thing, when you do macro, if you use macro, then you have to ensure that the sheet is appropriately designed, and then you run the macros. I mean, first is you have to set up the macros. Once you run, then if sheet is appropriate, then you run the macros for multiple rows and multiple columns. It will prepare everything and give it to you. But some rules has to be followed. That sheet has to be in the same fashion. That means what I am saying, P column, C column, D column. This is what marketing cost means, marketing cost, or whatever the variable. That should be very clear. When you copy paste in that, it will be like that. Then because it is pre-written macro, the macro will work accordingly. And then multiple sheets it will open and it will give you the formula. And then probably you want to use that to your main model where the projections are there. That also can be done when you use macro. But for simple the logics, you can do it one by one also. Yeah. Kazi sir has used Minitab, I think. Yeah, I used Minitab from many years. 2010 may also I used, and again I used 2015. Anything else? Are we good with regression? If you ask me very deep questions on regression, even I don't know, because I have learnt regressions at least 5 times, but because we don't use, we forget it. I learnt in when I went to IIM Kolkata, and when I did Six Sigma green belt, so many times I learnt, but I forget again.
Considering the time, it's 9:45. We can take one question from the participants, and we would like to conclude the session.
Yes.
I think one participant was trying to raise a query. Actually, Mr. Nataraj, I would like to summarize your regression analysis and just help me if I have gone wrong. So by doing this regression analysis, whatever projections I'm trying to make, it will help me to establish the genuineness of my projections. Is this a summary of regression analysis?
No, it's not the other way. Okay, that also can be done. Then you are doing double work. But you can just use directly regression analysis also. No, you can. You see, obviously we want double check. But then you can use see, if we understand the p-test properly, if you know that this is dependable factor, you can do regression directly. Then you are saying you are using regression. Okay, now we are talking about
use regression.
ROAS. ROAS only, by ROAS only we are deriving sales, no? Then you use regression, there is nothing wrong. You don't have to do ROAS.
Correct.
Like the founder will know whether this is dependable factor or not, even without doing the p-test. But if it is depending because of marketing cost only my sales is coming, then you just directly use regression. Or because of some other thing, some employee cost, I'm getting sales, like that. Otherwise, if you don't know whether what is dependable or not, then you use p-test.
Yeah.
You are right. You can use it as a validation also.
Yeah, we have come to the end of an interesting session, an eye-opener in many areas. On behalf of Bangalore Valuers Association, I request Mr. Chandrasekhar to formally convey a vote of thanks on behalf of Bangalore Valuers Association.
Thanks, Shilpa. Am I audible?
Yes.
Mr. Nataraj, I think we had an excellent session today on this financial modeling. Though it is a regular topic, we will keep conducting once in a while. But I think each time there is a new learnings. You started financial modeling, the detailed worksheet, dashboards, ratios, and all this regression analysis, use of macros. I think today's session, though, looks to be a routine topic name, but in terms of learning, there are many learnings. In fact, to honestly admit, regression
Clarity was.
And probably little more time spent on regression. I didn't realize it will take.
Yes. Yeah, that is a little technical in nature, basically Excel, I think, but we have to put the efforts.
Yeah. Okay, that's great. Even I enjoyed the session. Thank you for the opportunity.
Thank you.
Neela, can you post the feedback form in the chat?
Ma'am, I've posted it.
I request all the participants to give their feedback, which will help us to organize any such sessions, what is of more interest to all the participants. Thank you, everyone. Thank you, Mr. Nataraj.
So much.